Maybe I'll make an introduction and then I'll let Liz take it. I want to thank everyone for coming. This is our third or fourth one of these webinars. We're trying to do one every week. This is one in particular I'm really excited about. We have Headset here, and they're going to talk about the real data of what's been happening since the pandemic. And I know everybody can see everybody who's participating. I know it feels like a little bit like we're existing in a vacuum right now, but I'm like super curious to see what's actually happening out there, what the trends look like, and to try and predict like what's going to happen and what must be the most completely unpredictable time in our lifetime. So we've worked with Headset for a long time on these. They've spoken at our other events. We really enjoy them every single time that they come and present, and we're thankful to have them. So I'm going to pass this over to Liz. For those of you who have not participated in these before, we take questions at the end. You can use the chat function or the Q&A function, and then I'll ask the questions at the tail end, and we'll make sure that everybody gets them answered. So Liz, thanks for coming. Thanks to Headset, and take it away.
Yeah, thanks for having me, Amy. My audio's good, I assume. Not someone jump in and yell at me. Well, great. I'm going to get started. I'm going to share my screen. So hopefully you can see it. You should be able to see my notes right now. I'm reminding myself to say my name so I'm not a robot. All right. So what we're going to do today is talk a little bit about how the COVID crisis has impacted consumer trends in cannabis. Before we get started, I just thought I would give you some information on who Headset is. So Headset is a cannabis data analytics company, and we have three main product offerings. The first one's called Insights, and it's a market intelligence product. In Insights, we provide daily product level information on cannabis sales to help producers, manufacturers, investors, and retailers understand the cannabis market space. So in Insights, you can find information on product sales, brand ranking, packaging trends, pricing and discounting trends. These are all meant to help you drive your strategic decision-making in the space. We have a newer demand planning module in Insights that helps analyze the impact of events. We built it originally to understand things like 420 and the Christmas rush. It's become particularly important during the COVID crisis, and we'll look at a lot of that data today. All of that data is created all that data is forecasts created using data from our participating retailers. So right now that's just over 1,000 retailers across the United States and Canada. And this is what I'm going to show you today. We don't yet have Insights in Oregon, but I did go ahead and create all of the Insights forecasts for Oregon for the most part to do that data. Hopefully we'll have Insights in Oregon soon, and this is kind of a first look at what that would look like. And then kind of continuing on our other products, we have Retailer, that's our second product, and for retailers. And it's a business intelligence tool for them to assist them in tracking their sales, optimizing inventory, streamlining operations. We have two different products here. We just launched a new one, I think yesterday or the day before. So our first one's Pulse, and it's free for retailers in Oregon right now. And that's where you really understand your sales trends. You can manage your inventory better and even your sales staff. Our second one is called Retailer Premium. That's what we just launched this week. And here, this gives retailers deeper analytics, including things like market basket analysis and demand planning. So in that tool, you can answer questions like, how effective are my referral campaigns? Do discounts drive higher baskets? What's the attachment rate of pre-roll onto flower baskets? What % of my baskets contain a given brand? Does a certain brand drive higher purchases? And you can even get down into consumer analytics if you use a loyalty program and see what types of products over-index to different groups of people so that you can staff and stock your store better to the types of people in your store. Here, there's about 20 dashboards, and it's meant to help you understand the who and the when and the how of your sales drivers. And then our final tool is called Bridge. It's a vendor-managed inventory tool. It allows retailers to directly share their data with vendors in order for both parties to better manage their store's inventory and to get products where they need to be to avoid things like overstocks and stockouts. It's becoming particularly important right now as demand becomes even more difficult to forecast. So, now that you know who I am and what I do, let's get started with how COVID is impacting cannabis sales. So today, what we're going to do is specifically, we're going to look at sales in California, Oregon, Colorado, Nevada, Washington in the US. And occasionally we're going to compare these to sales in Ontario, Alberta, and British Columbia. Like I said, this data is all based on forecasts using data from our sample of retailers, and this is all of our insights data. Here's our agenda. Today, we're going to go over first how things are changing, how the daily sales are changing. Next, we're going to look at some market comparisons. Oh, shoot, that lets you see that, doesn't it? Sorry, guys. I'll move that. It's blocking my slides. Okay, there we go. A little bit better. So we'll look at some market comparisons. We'll then dive into some purchase patterns and how product preferences have changed. But the way this is going to start, this is a new format for me. I've never done a format quite this way. But we're going to start by spending about 15 minutes examining just a single graph. And then we're going to move on and do the last 15 minutes diving a bit deeper into the data. And the reason I did this is because I feel like especially right now, there is so much data. I think I wake up and scroll through my news feed in the morning and see 20, 30, 40 charts just handed to me. I'm a career data scientist. I've been doing this for 13 years. And even I am starting to get chart and data fatigue. And it's becoming really difficult. I see a piece of information and I kind of just glance at it and move on because there's so much. And what I want to do is really just dive into one chart and help us truly understand what's taking place. I'm viewing this a little bit like analytic self-care today. I feel like I never get enough time to truly inspect a chart the way I want to. So I'm hoping that you'll enjoy doing that with me. I picked a real meaty chart as the chart we're going to examine. Don't worry, I'm going to break it down. I'm going to hide some stuff and highlight some stuff as we go through it. But this is the chart that we're going to spend about our first 15 minutes on. So let me first explain to you what the data is before we start trying to figure out what it's saying. So to make this data, what I did is I took the median like store sales growth in each one of these markets. And I compared their sales. So I got the average daily sales in January and February. And I compared that to the same weekday from March 1st forward. So if we're looking at, say, March 3rd, which was I don't remember, a Tuesday, I would be comparing sales on Tuesday, March 3rd to average Tuesday sales in each market in January and February. And this is meant for us to see how the market is moving and changing, what's growing, what isn't. So to get started, now that we know what the chart we're looking at is, and if you have questions about the chart, ask questions in the chat. To get started, here's what we're going to look at. So we're going to white out that first bit of the chart and just look at the first 10 days of March. So the very first thing we see here, this is before anyone really started talking about COVID. There was some information in the news is before this was a really big concern in the United States. It's probably still where we've heard the word, we're saying the word, but most of the information on the outbreaks is in China and maybe just a little bit in Italy. And so here what we're looking at is sales. This is a very regular pattern. This is kind of what we expect. All states with a little bit of growth, almost all states had been showing day over day, even sales growth trends in the United States and in Canada. So most of our markets were growing between maybe 5, maybe 1% and 10%, I suppose, month over month. So this is regular. This is our baseline. This is where we still see normal weekday patterns, things like sales cresting on Friday. This is where we see normal seasonal patterns. So some of our markets, seasonally, March is a really big month for them. One of those markets is Colorado. A lot of people go on spring break in the month of March. A lot of people go skiing in Colorado, and that tends to boost sales in Colorado. Nevada is another place. A lot of conferences take place in Las Vegas. And there's March Madness, usually in March. So these were all things that we were thinking about and getting ready for in the month of March. And then about March 10th is when states started doing stay in residence orders. I think in Seattle, which is where we're based, we were sent home on the 10th of March. And I think most states followed quickly thereafter. So here's where we see that next week. So we see sales really start to pick up. This is as people begin to worry about supply. So are they going to be able to get things at the store? I believe we all remember attempting to purchase toilet paper in the second week of March. It was horrible. It was truly horrible. I had an easier time getting Backstreet Boys tickets in the 90s than I did toilet paper in the second week of March. So we saw that consumers start to panic. We saw a lot of people stocking up. We saw a lot of people not sure if cannabis retailers were going to remain open. So there was a lot of back and forth from governments and legislatures at the time. Some markets closed and then reopened the stores. Colorado is a good example. In Denver, I believe on the 20th, cannabis retailers were going to close. That got reversed before it even went into place. But these types of things really spiked demand as consumers tried to purchase what they needed or what they thought they would need, unsure of when they'd be able to go back to stores.
Liz, I think you froze. I don't know if that's happening for everybody.
Excellent. Can you still hear me?
You froze for 1 second.
Okay, I'll go back. Well, spoilers. All right, if it happens again, let me know. Can I say how much I love doing everything over the internet? It really has made my life enjoyable.
You know, at least you can see my cat. Well,
oh, true. Aw, look at that. Yeah, the pets are the real winners here. Okay, so now that I'm back, we'll do that reveal again. So here, that March 16th, that's that first spike you see on the graph. In most of our markets, March 16th was a Monday, and that was for a lot of people the first day that they did not commute into the office. For a lot of people, it was their first day not having a job. So that was the first week where we see, when we look at historical unemployment claims, they start to go up. To put this spike on March 16th into perspective, we usually see about 100% sales increase on 420. What happened to most retailers is on Monday, March 16th, they saw sales surges, much like they're used to seeing on 420. A lot of retailers were unprepared. A lot of consumers were unprepared. We saw a large amount of stock outs. We'll look at that a little bit. We saw really high average baskets, and we started to see very different products be purchased by consumers as they were trying to make these purchases for what they thought could be a very long time. Coming off of that spike and moving just a little bit over to the graph, we can still see you don't see sales return to normal levels. So this was not people going in, buying a ton of toilet paper and then not going back to stores. That isn't what happened here. Most states saw sustained increases. Oregon is one in particular, that the median store in Oregon, even though they had nearly a 100% jump in sales on Monday, March 16th, they saw the remainder of the week coming in at 50% above normal levels. So this is a massive surge on sales. This is where we started to see products stuck out. This is where we started to see people switching the types of products they bought because it was difficult to find. So this is a really, really different time for us. Now, if we look again, I'm going to expose a bigger portion of the graph. So here I exposed almost a month. So we're going from about March 20th until about April 10th. So we do see the market start to come down. We're not hopping over those 100% levels. But there are 2 points I want to point out. And the first one is here. This is kind of where we start to see things stabilize. But we see this kind of notable spike here. This is April 1st. So it's the first day of April of 2020. This is our first indication that 420 sales were probably going to come in strong. So I have if you want to go back, I always love going back and seeing what analysts forecast because that's fun. We left all of our original forecasts up on our blog if you want to see some of the things that we were writing about at the time. But for me, this was my first point watching the data where I thought, okay, I think that 420 is probably going to come in pretty strong because we see sales spikes on this day. The next thing I want to point out is stimulus checks. So on April 15th is when the first set of stimulus checks started hitting consumer bank accounts. This is the first time that I think it was between up to $2,400 I think for a family coming down as incomes went up. But this is the time that stimulus checks started going into bank accounts. And I'll point out that day right here. So it's pretty easy to see those stimulus checks hit bank accounts. So this was interesting to me because cannabis is still so new. Even in states like West Coast states like Washington and Oregon and Colorado, adult use cannabis has only been legal for 6 or 7 years. And it's actually never experienced a negative business cycle. The negative business cycle is anytime you see economic indicators going down. So these are like recessionary periods, right? So the big recessionary period that most of us most currently remember is the one in 2008, 2009. Adult use cannabis was legal in no markets at the time. So we really don't know how consumers are going to react in a negative business cycle with their cannabis spend. So there are two types of goods. There's one, like luxury goods or normal goods. And what they do during recessions is you see them come down in sales. So for instance, during negative business cycles, we see people purchase less high-end makeup. You see expensive travel go down. Tiffany's didn't do very well during the last recession. So these luxury goods, these are things that consumers cut out of their spending when they don't have as much money or when they're worried about not having as much money in the future. The other types of goods are called countercyclical goods. And they're called countercyclical goods because they don't follow the business cycle. And so when there is a negative business cycle, when things are worse, they actually go up in sales. So a good example of those is alcohol that you purchase at the grocery store. So it's called off-premise alcohol. So things like the suitcases of Coors Light, right? Cheap beer. So these actually go up during recessionary periods. Another example that's like a classic economics example is spam. Spam does very well, not the email spam. Remember the one you eat in the can? Spam does super well during negative business cycles, and it's because it becomes a cheaper thing. So people substitute it in for more expensive things. And so that's what we were wondering. That's kind of a thing that's on everybody's mind is how is cannabis going to react to a negative business cycle? So right around the 15th is when people did get a bit more money in their budget, but I do believe by then we were looking at 10 million jobless claims aggregated to that point. So we are seeing a lot of jobless data. And we are seeing people worried about what the future looks like. The stock market was not doing very well at the time. But we do see people go out and purchase cannabis. So this is one of my first indicators as an analyst that I do actually think that cannabis might have some countercyclical tendencies. And we're going to dig into that here in a minute. So each of these kind of points where I talk a little bit more about the graph, we're going to dig into these as we go along. All right, so here we go. Here's 420. 420 this year was actually a really interesting time. So I didn't put any of the true 420 graphs up. They're on our blog if you want to go to our blog. But what ended up happening was rather than seeing the big spikes that we usually see in 420 in all markets, Oregon is a bit of an exception. They had a larger spike than usual. But what we saw is sort of this build to 420. So we saw sales start to increase by the 15th and 16th and continue through that Monday. And so what that means is when we think about the total 420 spend of a consumer, right, the amount that they spent to consume on 420, I think that amount was actually larger than it was last year, but it was spread across other days. So 419 had a really large sales bump this year. So did 418. Those aren't traditionally things that we see. So I do think that 420 sales were not at all negatively impacted by, at least in most markets, by COVID. But really what happened is consumers shifted the way they shopped. And we're going to look into that. We're going to look into how consumers have shifted the way they shopped here in a minute. What I want to do is take a little bit of noise off the graph. So this is the same graph you were just looking at. We really just are concentrating on two of the data points in the market for now. And those are Washington and Oregon. So in Washington and Oregon, the first thing I want to point out is that black line, the heavy black line at the 0% part of this graph. That would mean that sales are about the same as they were in January and February. But here's what you're looking at. This is the median like store sales growth. So you can see we almost exclusively stay above that black line in these two markets. You can see Washington at the beginning. So those bumps, kind of the first set of bumps right around 316, right around March, we see Washington trend just a little bit higher. That was because we got sent home a bit earlier than Oregon did here in Washington. The next thing that you see is the sustained growth for both markets. This is in direct contrast to a market like Nevada. So here we see Nevada. Nevada's sales spike, both Washington and Oregon saw their sales spikes on 316. Nevada was a few days later because their stay in residence orders didn't go in place until a few days later. But we see sales really come down. And there's two primary reasons for this. The first one is because Nevada's cannabis market is very heavily driven by tourism. So about 80% of adult use cannabis sales occur in Clark County, which is the home to Las Vegas. Las Vegas, the casino's shut. I think that you can see on this graph the day the casino's shut there in March, and they haven't yet reopened. The other thing that's driving a bit of this is the change in the way that cannabis retailers have to operate in Nevada. So cannabis retailers can't have people come in. It has to be delivery or curbside right now. So that changed the way that consumers shop. And it changed it immediately, and a lot of stores had trouble kind of getting their operations set up, right? And so that drove a lot of it downward. I want to compare that to Colorado. Colorado now is that light purple line that I added in there. Colorado is a very tourist-driven market. So when we think about places like Breckenridge and Steamboat Springs, Aspen Vale, these are places where we see a lot of people go for spring break holidays. So you can see that purple line, especially during March, trending downward. It started to come back up lately. A lot of that's because Colorado has eased some of their restrictions on people being allowed to go out. But most of that growth is actually happening in retailers that are not in the touristy areas. So if I had taken this graph for Colorado and broken it into two graphs, ones that were in very touristy areas and ones that were not, we would see a really big difference. Again, this is something that is either in our blog or our COVID report. I didn't want to just reiterate everything that I've said other places that you can find on your own. But that would be what happened. So this is one of the reasons this is why I wanted to like slowly go through a single graph with all this information, is because it used to be, remember when we looked at the beginning of the graph there on the left, that March 1st to March 10th-ish, most markets were pretty similar. And if you, as a forecaster, if you had given me information on Colorado, I probably pretty confidently could have predicted what would happen in Washington or in Nevada. It's actually not true anymore. So one of the things we do as forecasters is take all of the data we have from different places, and we look to see what data predicts other data. So it used to be that most of my states could help predict other states. They were very useful because states acted similar. They've become less useful, and in fact, I have to do different forecasting models for every single state now because each state reacts differently. If I was forecasting at the city level, we would have had to do that even further because each of these cities are very differently impacted. So we compared markets. The next thing I want to compare, we're going to stay on the same graph, but instead of showing you by markets, I'm going to go just into the Oregon market, and I'm going to compare by category. All right, here we go. So our first category, sorry, not our first category. This is the total Oregon market. Our first category is going to be flower. So here what we're doing is we're comparing the sales changes in flower to the rest of the market. So you can see that flower has generally hovered slightly below, or I'm sorry, this one's pre-roll. Jeez, you guys, killing it today. This is pre-roll. We see pre-rolls hover slightly or even significantly below the rest of the market. That was especially true in early March, but it's remained true all the way through today. And this is true in every single market. This isn't unique to Oregon. And we're going to look a little bit, we're going to dig a little bit more into pre-rolls. But I think what we really see are two things happening. So the really big difference, the difference you see between maybe 316 and 325, that very, very big difference where pre-rolls are really not growing at all compared to the rest of the market. That was when we were still learning a lot about COVID, and I think there was a lot of consumer concern about lung health during that time. So a lot of inhalable products didn't do very well. Since then, though, things like vapor pens and flower have very much rebounded, but pre-rolls continue to lag. And one of the reasons that pre-rolls continue to lag is because of the way we generally consume pre-rolls. So when a lot of times when we have pre-rolls, it's something we'll buy, maybe a gram joint, and it's something that we pass around. One, there isn't really anyone to pass to right now. So that's part of it. But as we're thinking about what that can mean for the future, even when we start to come out of our homes and we start to be able to interact with people, maybe you can have people come and have a backyard party, right? There's some people so excited about backyard parties. I have a roof. I'm so excited for roof parties. But even when I'm comfortable allowing people into my home for that, I'm probably not going to be super comfortable sharing something that's been in my mouth with them. So this is something where we can see the way that that society is changing really impact consumer preferences, and it makes us think about the things we stock in our stores and the things that we make to sell to consumers. So let's compare that to a different category. So here I'm looking at edibles and beverages in Oregon. You see edibles and beverages slightly outperforming the market most of this time. We saw it come down in two places that I think are significant. And one is around 420. So you see the dark blue line just be a little bit below the orange. That's common. Edibles and beverages, 420 isn't necessarily there where we see the biggest growth. So this year they were just a little bit shy of normal trends. But we also see it on that 415 bump, that stimulus check bump. So that's interesting to me because it might mean, remember I told you I think that cannabis is showing a lot of indicators of being countercyclical, but that tells me we might have to examine category by category, whether we think that that will be unilaterally true across all cannabis products or whether some cannabis products will do better during this time. And we'll look at that again in a minute. This concludes my 15 minutes on a single graph. So I will move on and show you different graphs. I'm not sure if this was more fatiguing than a bunch of graphs or less fatiguing, but I wanted to really take that time to dedicate ourselves to really understanding a single piece of data around us. I think right now a lot of people are putting out a ton of data and it's easy to kind of just move past it. When we can take a second to really break it down, we can synthesize that data a little bit better and understand what's happening. So now, knowing all the things we know from really digging into that graph, there were a handful of things that I brought up as maybe something to look into further, or something that we would want to do different as proprietors of cannabis businesses. And so let's look at just a few of those. So the first thing I'm going to talk about is, here I put a title of staffing your stores. I think this is also true for planning your deliveries, planning your production schedules if you're a manufacturer. And I think that this is very true if you're someone trying to forecast or do a pro forma for a cannabis business right now. And the first trend that I want to point out, again, a squiggly line graph. This one is a different method. So what we're looking at here is the growth of today, or the growth of the day, compared to the day prior. And the most important thing I want you to get from this graph is that trend, that up and down trend, right? It looks a little bit like a heart rate monitor. So we see sales on Wednesdays start to creep up. Thursdays are a little bit higher. Friday is the big day for cannabis in most markets, not all, but in most markets. Friday is our big day. Saturday comes in just a bit softer than Friday, with Sunday taking us back down to more normal levels, and then we continue to crest through the week. This is a very predictable trend. So even if you're not someone that is as data driven as I am and looking at graphs and charts all day, you knew this, right? You knew this when you ran your stores. You knew this when you planned when your deliveries should be there, right? We should have our deliveries there before Friday afternoon because that's the rush. But something really interesting has happened, and in my whole career, I've never seen this happen, and I'm not sure I ever will again. This is the trend now. So before, we could so easily predict when consumers would be in stores. We could easily predict when we needed to have products on our shelves. We can't really do that quite as easy anymore because things look very different. So a lot of consumers, again, we saw those rushes around 316. Remember, we were looking at that. We saw rushes to stores around the stimulus spend. I didn't point it out in the prior graphs, but we didn't see the 420 hangover that we usually see. So it's usually a sales hangover on 420. People go and they take advantage of the very deep discounts on 420 and kind of stock up their pantries. And then we see that next week come in quite soft. It gives everybody a bit of a breather. This year, actually, the week after 420 did not come in as soft as it normally does. And so all these things that we're used to knowing aren't true. And the reason I want to point that out and make it super critical is because all of us as people, our brains are just little algorithms, little pattern recognition specialists. That's all they do all day is they look at data around and they try to predict what will happen, right? And they try to help you make your decisions better. But when you think about everything that's happening today, all of the information that your brain has on normal trends isn't really true anymore. This is one of the reasons that it's so important to be watching the data very closely right now. We should always be watching data closely because it's just very fun. But is why it's so important right now is because the things that we used to know to be true and the things that we can expect are different now. And so I think that's really well highlighted by this graph. I think for the rest of my career as an analyst and a forecaster, I will be having to make adjustments for March and April of 2020. I'm already looking forward to 10 years from now when I have new analysts coming in and I can tell them about back in the day. They'll say, why do the graphs look so funny? And we'll be able to do those lovely, like walked uphill both ways stories. But other than just hazing new analysts, I think this is really important for us so that we can try to help understand what we should do next. So if you're thinking about having your store staffed or getting your products in the right place, you might want to rethink those Friday afternoon rushes that you knew to be true. And another thing I'd like you to look at a little bit here is the time of day. And so the shaded area, the gray area on this chart, this whole chart shows you the percent of total sales by hour. We're doing it week by week. So the gray area is before COVID. So the gray area is in the first week of February. And then those lines slowly get oranger as we move into April. So what happened is we see all of that stuff on the far right of the chart there. Those are sales that are happening in the evening hours. So after 6, 7 p.m. We see a lot of that evening hours spend shift into morning hours. That's where they see that orange line come up in the mornings and mid-afternoons. Two primary drivers of this. One is people not commuting into workplaces. So if I'd showed you this graph for a downtown store versus maybe a rural store, or a store located in a suburban area, this would look even more different. So I couldn't break the data down 600 or 700 ways, but if this isn't data that you're looking at on your store or the market, I would encourage you to try and go look at it because all the strategies you used to stock your store or staff your store before might not work today. So we're starting to see people come in a lot earlier. And we're starting to see how much they purchase during those times be very different. And what has happened is a lot of stores are running into stock out issues, and a lot of producers, manufacturers aren't getting their product to the stores before these big sales events or these when consumers rush into stores. So this, I don't have this for Oregon, but I do have it for a handful of the other markets. This is looking at the average weeks of carry of inventory. So weeks carry for inventory isn't a metric you're familiar with. All it does is it goes in the back and it counts how many products you have in your storeroom. And it divides it by how many products you usually sell. And it tells you if you didn't buy any more products tomorrow, how long would it take you to get rid of everything that's in the back? And so what you see is in places like California, actually in all the states except Nevada there on the right, you see that the average weeks of inventory carry came down really fast. What that means is that retailers were stocking out of products and they weren't getting orders in fast enough to satisfy the current demand. This is a scary chart if you are a producer or a manufacturer, because what that means is your likelihood of stocking out is going up. And for every time a consumer comes in to buy your product and it's not there, not only do you lose that revenue, but you actually have the chance that they purchase a competing product and like it. And so even if they don't totally switch to that product, they might add that into the rotation of products they purchase. So this is a scary chart if you are a producer. If you're a retailer, perhaps consumers will just substitute into another product. Perhaps they would go to another retailer to find the product they really want. But one of the things we need to be concerned about is what types of products we're stocking out on. So if we're stocking out on our high margin products and consumers are backfilling with our lower margin products, again, that's something that could lead to a shift in consumer trend going forward. We don't want to shift our consumers into our lower margin products simply because we were unable to keep up with demand. So this is something that I think is critical to look at. I actually just, if you use our retailer platform, I just added this view into our retailer platform on Monday. I added a set of just a whole dashboard to look at your data this way so that you could better understand how your trends are taking place. Because I think it's really important right now. It used to be very easy. We knew how much to order, how much sold last week. We didn't have to think about are our levels of inventory in the back coming down and what does that mean for us? Now, perhaps some people had too much, and this is a good way to release some of that working capital that's tied up in inventory. But perhaps if you were running, at a truly optimal level, I think it's time to go through and really examine your ordering and make sure that you're ordering the right amount. We see an opposite trend in Nevada. Nevada, again, we saw demand collapse there, mostly because of the lack of tourism. And so in Nevada, it's going to take even longer to sell through this inventory. This is super scary if you're a retailer because you're going to start to get to the point where products are expiring. And so if you are a retailer that's in an area that is either tourist driven or an area that maybe you used to get a lot of commuter traffic, people coming in on their lunch breaks and after work, if you're in a downtown area, this is, again, something I would really watch. If you're used to ordering, 100 units every Friday, you really need to go through and examine if you need to order that or if you should bring that slightly down so that you don't risk having your shelves in the back just filled with stock. Because if we sell through even a little bit slower, we could risk having those products start to expire, just not be as fresh, which isn't what consumers expect. So now let's get into how preferences are changing. All right. This is my stimulus effect slide. I put it in there just to kind of show a little bit more about the stimulus effect and how people make purchases. So the kind of teal color, it's got the arrow above it. That's April 15th in every single one of those states. You'll see Alberta all the way there on the right. The reason I put that in there is because Alberta, they didn't issue stimulus checks that day. They do have their own stimulus program, but it's very different. It comes bi-weekly, I think, and it's smaller amounts. But I wanted to put that in a baseline to say I do think that this is an effect of the stimulus check, and I think that helps us see that. And so as consumers got more money in their bank accounts, what did they do with it? We know they came in and shopped, but what did they buy? And does that tell us anything about how they're going to change how they purchase going forward? So here what we're looking at, this is just for the state of Oregon, is the average basket size, the average amount of consumer spent in the store. We see through January and February kind of this $30 to $35 baskets. All those little ups you see, those are Fridays. Fridays generally have larger baskets than any other day. We see that start to climb through COVID. So people are spending more when they came in. There's two ways to spend more in a store. You can either buy things that cost more money or you can buy more things. And so if we look, we can see that while this was driven by people buying more things, that trend doesn't exactly follow the trend of the average basket. And so people are actually purchasing more expensive things during that time. And I want to look at what makes those things more expensive here in a second. But this is where we start to see consumer preferences shift. So people are buying things very differently than they used to buy. And so if you're a manufacturer thinking about what products are you pushing out right now, or if you're a retailer thinking about what products should you be stocking up on, here's a couple of things that I think, a couple of graphs that I think are helpful for that. This looks at sales growth, average change in daily sales. So it kind of takes that really big chart that I was looking at and smashes it down into just a single point for each category. And so what you're looking at here is edibles and beverages, flour, all doing quite well. We get down into vapor pens, capsules, tinctures, again, trending slightly above market. Pre-rolls and topicals are both down. So pre-rolls, we talked about that a little bit, right? Just kind of changes in the way that we consume. Something that's interesting, and I'm totally blanking if I have a slide on this later, so if I do, we'll just pass by that slide. I don't think I do though, is it's not every single size of pre-rolls. So especially the larger pre-rolls, the ones that are larger than a gram, the single joints that are larger than a gram, those have seen particularly soft sales. Sales of pre-rolls that are less, that are a half gram or less, those are actually doing okay.
Hey, Liz, can I ask you a question? Normally I would interrupt.
Oh no, I love questions. I'm ready.
Somebody asked what time period is this slide comparing, and I just thought since it's like slide specific, I didn't want to miss my moment.
Oh yeah, no, I appreciate that. Otherwise we have to do that awkward thing where I like click back. Is it this one? Is it that one? Yeah, so this one is comparing sales, again, that January, February timeframe to sales in the last 2 weeks of March.
Last 2 weeks of March. Okay.
Last 2 weeks of March. Yeah. It kind of blends them all together there. Yeah. And actually we have seen pre-rolls start to come back up a little bit. I do think I have a slide that shows that a bit more. If not, we did a specific pre-roll post on our blog, just looking at some of the things that are changing in pre-rolls, because pre-rolls seems to be pretty impacted.
And I noticed that some people are raising their hands. Will you type your questions in the chat? I'm watching it super closely. So if you have something that's pertinent, I'll stop. If not, we're tracking all the questions for the end.
Thanks, Amy. I appreciate that. Yeah, and so our last one that maybe isn't doing quite as well is topicals. Topicals, it depends on the market, but topicals have really high AIPs, average item prices. So a lot of topicals retail for $40 to $80. So two things I think are happening to topicals. One, topicals might fall into that more luxury good that we were talking about, that maybe as consumers get concerned about their discretionary income, maybe they'll pull that back. Another thing that I think is happening there is actually before this webinar, I had to put on my makeup for the first time in like a month and a half. And so I don't think we're as concerned with things like moisturizers, wrinkle creams, even some of the products that maybe are meant for pain. We have a lot of people unemployed. We have a lot of people maybe not commuting. So people have changed the way that they are living their lives, and that is going to change the way that they purchase their products. So I'm going to dive a little bit into the flower trends we were looking at. So this is just for Washington, and again, this is I'm comparing the week of big sales increase, March 16th, to the trailing 4 weeks. So slightly different comparison there. I just already had this data together and I didn't want to re-pull all of it. But as consumers came into stores that March 16th to do their stocking up, we saw ounces, half ounces and quarters really see their sales increase. Sales of single grams went very hardly increased at all. This trend is actually sustained in that 1 gram packages still aren't doing very well. I think they even have negative sales growth, not negative sales. That'd be weird. Negative sales growth. Eighths are doing pretty well, and actually quarters and halves are doing pretty well right now as well. It seems to me that consumers are likely trying to make bigger purchases when they come in, so they don't have to come in as frequently because we're all trying to social distance ourselves and reduce the amount of time that we're around others. So if you're a flower manufacturer or you're a store, I know that in Oregon, y'all are deli style mostly for your flower, not a lot of pre-pack. Here in Washington, we're pre-pack. But as you're thinking about even like what kinds of containers do you need in your store, right? So when you take it all out of the deli jar and you package it up to give to someone, you might need fewer of the smaller containers for a while because it seems like that's not something that as many people are purchasing. If you're a flower manufacturer and you are doing pre-pack and you're doing pre-pack grams, maybe it's time to think about whether that's the right strategy for you, at least for the next couple of months. That one I talked about already. I did have a slide for it. All right, so this is the very last slide, and then I'll do my recap. This is looking at eighths in Washington. We're breaking them down by their price. And so I've had a lot of questions lately about whether or not consumers are shifting into cheaper products or value products during this time. So what I did is I broke all the eighths down into different groups. And you can actually see that purple bar at the bottom is eighths that cost less than $20. Just so you know, in Washington, all of headset data is before consumer paid taxes. In Washington, our consumer paid taxes are 45%. So when you see a product be $10 on the shelf or $10 in this slide, I as a consumer would pay $14.50 to get that. That is different than all the other states. All the other states, it's very small on the consumer. Just a little nuance there. But anyway, these eighths that are less than $20, we see them actually relatively stable to maybe going down. And we see eighths that are priced between $25 and $30 really growing in market share. So it doesn't appear like consumers are shifting into the value price products just yet. Perhaps that could change, I think, as jobless claims continue to go up. Maybe it would. This is a ding up because I think that these are things that are likely to shift quite a bit. And something that's really important to keep an eye on. We have some COVID dashboards that we're launching that look at just this graph so that you can keep an eye on how those trends are changing. All right, so quick recap. We looked at how daily sales trends were changing. The biggest thing we noticed there is the big stock ups. So it wasn't just toilet paper and yeast that people were buying at the stores. They also were buying cannabis. We compared markets. We saw markets in places that were very tourism driven to be down. We talked about how markets or even retailers that are in city centers might be seeing slightly depressed sales compared to places that are in more suburban areas where people live rather than work. We looked at some of the purchase pattern trends. So some of that was that people were shifting away from weekends and away from evenings and into different hours. But the other was the trend where we used to be able to really easily predict sales. It had that very kind of cyclical pattern week to week, and we don't see that anymore. So that was where we were stressing the importance of understanding how sales are changing over time for when you need to have your products ready and your sales staff in the store. And then the last thing we looked at are purchase patterns. And there really what we were talking about are how things had changed recently. So when you think about our pre-rolls, right, we saw pre-roll consumption go down because people aren't maybe socially enjoying cannabis in a group as often. But we also talked about what that meant going forward, right? So when we think about products that would have to be shared, that might not be a product that's going to rebound anytime soon. And so when we think about there's really kind of, in my mind with this, two things that happened. The immediate thing, we were scared about COVID, we stocked up on stuff. But now we have kind of these lasting effects that could go through the summer as people continue to social distance themselves and change the way that they interact, not just in society, but even when they're buying things. So with all that, I have a couple of resources for you. The first one is we update a blog. We used to do it daily. We do it about twice a week now. But there's a link in the slides to that if you're interested. And then our Insights product is what I made all the data with today. We have a free version of that called Insights Pulse. It is not nearly as deep as what you saw today. It's a very high level category, not in real time. We also have our Insights Premium, which is real-time data. And that's what I used to make all the slides you looked at today. And then just today, I think, maybe it's actually on Monday, we have a COVID report that we're putting out. So once a week, it's a very standard research report format. And what we do is we look at the trends for the most recent closed week, and we kind of talk about any big things that we're seeing in the marketplace. So for instance, in the first week, we talked a lot about stocking up, and the next week we talked about changing consumer behavior. We do a deeper dive into 420. We're going to do some consumer preferences deep dives over the next couple of weeks. And so that's a report that we've got 8 weeks or so in there, and we're going to publish up to 10. And there's a link to that in the slides too. And with that, I'm happy to answer any other questions.
Great, Liz, that was awesome. Thank you.
Oh, thanks.
Great. Really, really interesting. I'd be curious to see the longer this goes on, if we start to see some of those changes and like what kind of products people are buying, and if we finally start to see people pivot to those lower cost items. That is my most surprising takeaway, is that we I don't know if like the panic hasn't set in or the like economic devastation hasn't set in, but that was, I thought, like the most interesting and surprising piece. So somebody asked, how are you getting the Oregon data if you don't have the Oregon install base?
Yeah, so we do have the Oregon install base. I just don't have an Insights product there yet. So we're connected to, I think, 100 retailers in Oregon, maybe more. And so I do have market data that I forecast. We just haven't released it yet. So we're still kind of making sure that our forecast, you saw that in Oregon, for instance, I didn't really get down into any brands or products in our Insights product. You can dive all the way down to the SKU level if you like. And so in Oregon, I just don't have the data prepared yet at the SKU level for our Insights product, but I have it all prepared at the category, package size, even brand and price level.
Great. So can you see the questions, Liz?
So there's a way for me to see that.
You can
let me stop sharing my screen.
So it says, I'm a data nerd and I want to be sure I understand the math on the first graph. So writing the equation in dates, I think it would be equal. You have to take a look at it.
Oh yeah, that is interesting. Okay, so let me quickly tell you exactly what it is. You're super close, but not exact. So if you're looking at, your example is March 1st. Okay, if you're looking at March 1st, it would be, so the denominator there would be January 5th, January 12th, January 19th, January 26th, and then each of those Sundays in February. So I take the average Sunday sales for a store. Every single store, I say on average on a Sunday you sell $10,000. On March 1st, this store sold $11,000. So this store had a 10% increase in sales. So I do that for every single store I'm connected to, and then I take the median number.
Well, Sarah seems satisfied with that answer, so very excited. Does anybody else, because you're always the best. Does anybody have any questions for Liz? I think this is definitely, I think we should absolutely have you back at the end of May and see like where we start to see those trends. So if nobody has any other questions, I think we'll make the presentation available like we've done the other presentations, and it was awesome, Liz, always.
Oh yeah, thank you so much for having me.
We're going to send out links to their COVID-19 report, their blog, and then their retailer premium launch. So those will go out in an email to all the attendees now, and then the video will be up later today.
Yeah. And if you guys do have any feedback, that was my first time kind of really just staying on one graph. I've never done that before. If you have any feedback, just email me. I'm not sure if that was better or worse than normal. So
You're always spectacular, but that was a really good way to do it. So thanks everybody.
okay.
You're getting lots of positive feedback, so we really like it. And we'll check back in with you in May. Thanks everybody for coming. We'll do another one of these next Friday, and hopefully one day we'll be back in person with everybody. So thanks you guys. We're gonna shut off.
Bye.
Bye.